Well, perhaps it is the rally that we're seeing in Nvidia that is sparking renewed interest in that tech sector. Nvidia is up a little bit, but it's still a fresh record high. However, its multiple continues to grow even as its business in some instances doubles. We all know it's all because of AI hype. Yesterday, the company revealed new processing capabilities that allows users to take advantage of what AI can do right there on their own computers without needing remote access. Our next guest, though, when you look at his price target, suggests 20% downside on the stock. Let's bring in Gil Luria, analyst with D.A. Davidson. Now, Gil, technically, you don't have a sell on the stock. You have a neutral. But your price target, maybe you're kind of a bear in sheep's clothing there. 20% downside on the stock. Walk me through your thinking.
Yeah, Nvidia is a great company. They make a product that is very useful in a broad array of use cases, from gaming to automotive, and most importantly, data center. And it's a company that would have done well regardless of generative AI. Because of the generative AI boom, what happened is a lot of its big customers, the hyperscalers like Microsoft, Amazon, Google, and companies like Meta, are stocking up on its GPU products in order to facilitate all the experiments and pilots and new tools that everybody's working on for generative AI. That's terrific news last year. It's going to be good news this year. But as they get to their capacity that they need to have, they're not going to keep buying this for years to come, which is what current Nvidia estimates imply. The higher we go this year, the more we're going to fall next year, and that's not in the stock.
I really want to underline that point, that they have pulled forward demand, that the demand that they're seeing is not kind of the early innings. They've pulled it forward. And when you say it's the current estimates are not factoring that in. So consensus 2024 estimates have top line sales growing at 119%. What's your number?
I think that's doable. I think in 2024, they may get to 90, even $100 billion of revenue. The problem is what's going to happen in 2025.
Okay, so that number is, just to interrupt, that number is 57% growth.
Yeah, so that number is very doable for 2024 calendar. They're fiscal 25. Those numbers are doable because, again, those companies are still stocking up. The bigger question is what happens in 25, 2026, 27. Currently, street estimates have 2027 at almost $150 billion. This is a company that had $27 billion before generative AI. The likelihood of there being an incremental $100 billion of spend in this category over the next few years on a recurring basis is very low.
And I guess that helps us understand why you see that pullback. The flip side is, fine, growth can slow. An argument was made by another bull that says maybe the handoff goes to something like free cash flow, and that 100 billion number shows up in the free cash flow line, and they can use that either to return to shareholders or invest in kind of the next cycle.
Right, but let's be complete here. We're not talking about growth slow. We're talking about a decline in revenue sometime in the next 4 to 6 quarters. A decline in revenue means the multiple is going to go down very significantly on a much lower number. Now, I heard that bull case, and if you listen to that bull case carefully, what it says is, yes, revenue will decline in 2025 and going forward for a few quarters, but they can use that cash to make acquisitions and make up for it. Investors aren't going to like that. As soon as revenue starts declining, not slowing down, declining, the stock is not going to do well, and they're not going to be able to make up for it with acquisitions, because investors pay for organic growth, not for a company using its cash to grow through acquisitions. And with Nvidia, the expectation is right now is for organic growth to continue indefinitely. We think that's very ambitious.
So then is forecasting a 20% drop conservative?
It might be. It might be. I believe that as soon as we do get to that point of declining revenue, a lot of people are going to wake up to the fact that this is a cycle. In semis, we have cycles. We've always had cycles. Right now, the expectation for Nvidia is this time is different. We've heard that before. This happened to Cisco in 2000 when we were all excited about the internet and we were buying all these routers from Cisco, and analysts were extrapolating that Cisco would continue to grow from those very high elevated levels because the internet was going to be huge. Well, the internet is huge. It's much bigger than we even thought in 2000, but we had enough routers in 2000 as much as we needed, and Cisco declined and it's never caught up. That's the risk right now to Nvidia. Is this is a cycle just like any other cycle. We're going to stock up on these GPUs. We're going to have great Gen AI applications. But once we have enough GPUs out there, we won't keep buying them more and more and more as the expectations now imply.
There's almost no short position in Nvidia. There's no sell ratings in Nvidia. Yours, I guess, is the closest that it comes. As you socialize and talk about this idea, what's the response that you're getting from the investor base? What's the pushback?
That maybe we're early. That if Nvidia keeps going up every quarter for the next few quarters, which it very well could, then it's going to be hard to see that point, that cliff. As you're going up the hill, you don't really see the cliff until you're very close to it. And so we may be very early. We may be 4 to 6 quarters early. That could be very early, and that's a lot of the pushback we're getting. But again, underlying that is the understanding that these levels are not sustainable.
Gil, thanks.